What is up, YouTube? Welcome back to Stocks by the Numbers, and today is the 4th. It is Wednesday. I know it's a couple of hours after the market closed, but, something caught my eye that I know a lot of young traders were talking about because I know it's falling in the category of a meme stock, and I just wanted to take a look at it and just give you my 2 cents here, give you my slant on this company. Name of the company, Bed Bath & Beyond. Ticker symbol BBBY, listed here on the NASDAQ. Stock closed at $2.41, up about 4.33% on the day. We have a 52-week low of 2.25 and a 52-week high of $30 a share. Massive, massive range. We're at the bottom of the range, obviously. Let's see if it's worth stepping in. So first of all, we have a market cap of $212 million, and the company, if we look annually, has been doing terribly with these decreases quarter over quarter, year over year. But look at this, $7.87 billion last year, market cap $200 million. Oh, it should immediately go up then, based on your market cap to revenue comparison, right? We always see that on this channel. Well, yes, and also no. Is this an overreaction, right? Should the stock be trading at like $10, $12, not $2? In my opinion, yes. However, on the flip side, again, I compare to Goodyear Tire. If it can happen to Goodyear Tire, it can definitely happen to Bed Bath & Beyond, right? Goodyear Tire, at least they have their own products and services, right? They have something proprietary. Bed Bath & Beyond does not, to my knowledge. So Goodyear Tire, if you can have a company that actually has something proprietary, that is net income positive, but is trading, like 1/6 market cap to revenue, I mean, yeah, it can happen to a company like Bed Bath & Beyond, but again, a little bit of an overreaction. I would probably have a market cap close to about $1 billion here on $7.8 billion in revenue. However, again, a lot of people have been beating this company up. Recently got a letter from the SEC a couple of days ago, supposedly requesting more information. They were talking about supply chain issues or something, a problem with their inventory. I think I read an article saying something close to around $300 million loss or something. So the SEC is now requesting more information on that. And as we can see, it says 5 days ago the article came out, so it took a little bit of a hit, but it's not even about the article, right? Because if we pull up a 1-year chart, we're down 82%. We pull up a 5-year chart, we're down 89%. So something's going on. What is going on? Well, first of all, the company year over year, they went from north of $12 billion to now less than $8 billion. So the overall revenue of the business has taken a massive, massive drop. And now the company is net income negative consistently, as we can see, quarter over quarter even, dropping in revenue and dropping in income. And this company, again, to my knowledge, doesn't do anything proprietary, right? So proprietary means patents, intellectual property, right? Something that is specific to that company, that business. So if you want a new operating system, the company that has the largest market share, I believe, is Microsoft with Windows. So if you get a new PC, you're probably going to have to put Windows on it, or any operating system, but chances are you're going to put Windows on it. If you work in an office building with a bunch of terminals and computers, right, they probably come in every couple of years and they have to upgrade the whole system and get you on the new operating system, right? So if you want Windows, if you want one of the more popular, better operating systems, you have to go to Microsoft, right? If you look at pharmaceutical companies, they develop a drug, a new pill, whatever it is. There is a specific chemical compound to make that drug. So it does what it does. That chemical compound is what's patented. That is the intellectual property, right? So that's what helps not only protect the product or service, but more importantly, helps drive in revenue in the future, right? Because if you want the pill, you got to go to this company who made it. If you want Windows, you got to get it from Microsoft. That's who makes it, right? Bed Bath & Beyond, to my knowledge, doesn't have anything proprietary. So this is basically a brick and mortar outlet that sells you other people's stuff, right? So what does that now fall into the category of? Well, that falls into the category of like your Circuit Cities and your JCPenney's, right? These are companies that slowly begin to dwindle away, get delisted, go out of business, right? Why did it happen? Well, Circuit City Similar to a Best Buy, actually. I might do a video on Best Buy because basically we're saying the same thing here. But I think Best Buy actually bought a couple of brands. But anyway, I'll look into that. Going off on a tangent here. But again, Circuit City was a place where you would go in and you would buy, someone else's appliance or electronics, right? It's not theirs. It's someone else's. They're just holding it there in their store for when you walk in, they can sell it to you for a markup. That's how they make their money. Look at a company like JCPenney, right? Back in the 70s and the 80s, good place to go, right? They probably had good prices, good staff. You can get a lot of what you need under one roof, so people appreciated it, right? Now we fast forward into not only a bunch of new stores giving older outlets new competition, but more importantly, the online presence, right? And now you have a company like JCPenney that basically just withered away and went out of business. Reason being, no one had to go to JCPenney specifically to get anything. The shirt, the shoes you wanted at JCPenney, you could probably get from an online retailer like a Walmart or just another website like an Amazon who has more of them, can sell them at a lower price, or perhaps doesn't need to make as much profit off of each individual item as a company like a Bed Bath & Beyond or a JCPenney would. So you'd be able to get, a better price, save a few dollars. They offer free shipping, right? So, you're looking at it and it's like, yeah, I might as well just buy it online. And that, I think, is what we're seeing here with a company like Bed Bath & Beyond, right? Again, towels, bath mats, right? These are awesome things that, people buy. Problem is, could probably go online or go to a different outlet and you can probably get the same or a better product for the same or much less money, and you don't have to leave your house or whatever it is. So in my opinion, overall, looking at the big picture, it's not looking good here for Bed Bath & Beyond. We look here at the earnings. You can see the last couple of quarters, company's really struggling, just missing on the top and bottom lines, big misses on the EPS side, right? EPS dropping. This is annually. You can see it looks terrible. Even if you switch over quarterly, it looks terrible. We bring up the financials, right? That's what I mean. We don't even have to break it down because I already know what it looks like without looking at it. We look at our profitability ratios. Look at this. Double digits, healthy. Single digits, negative, minus 21% now, right? Return on equity was 30%, minus 77% last year. Return on invested capital, 20%, 16%, now minus 36%. The EBITDA, our main metric that we look at here in the list of profitability ratios, I guess you could say, right? People always talk about the EBITDA. If you bash a company, oh yeah, but the EBITDA is strong. All right, fine. Earnings before interest, taxes, depreciation, amortization, EBITDA margin, 14%, 11.6. You can see dwindles down, maintains 2% for 3 years, now minus 12.5%. We looked at the net margin percentage before. Was 7%, 5% and change, drops down negative, now minus 25.5%. I'm just not seeing anything positive here. Even here, the RSI, right, 30 and change, but look, dips below 30, pops up, dips below 30, pops up, dips below 30, pops up, right? So this company is just basically in an overall downtrend. You got the 50-day and the top Bollinger Band here at 343, so you could have the pop there in the short term, but I don't know. In my opinion, it's just not worth it. On the weekly, same thing, 30 RSI, relatively flat MACD. We could have some short-term volume and price action taking place here, but again, overall, in my opinion, I personally would not be a buyer, and if you are involved, I do wish you the best of luck, but I feel that it should be money that you can afford to lose. You need to understand this is a roll of the dice. This is what a gamble looks like. And I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. If you like the video, subscribe to the channel. But more importantly, if you have any questions, comments, or concerns, please drop it down in the comments section. And the best advice I can give you is last year was last year, this year is this year, right? Don't look back with your hindsight or looking at your crappy price entries on a stock, right? Don't beat yourself up. Don't stress yourself out over that. You need this year to be stress-free. You need to be more confident in yourself. And also Be enthusiastic. Be excited, right? The more knowledge, the more videos you take in, the more stocks you look at, you need to know that you are getting better, faster, stronger. Right? So you need to keep that in mind and know that tomorrow is going to be better than today, and you can't wait till next year, because that could be the breakout year where you really separate yourself from the rest of the pack, the cream rises to the top, and you look like an absolute champion, right? So stay sharp out there. But like I always say, I wish everyone success, and I hope everyone makes a couple of dollars. I want to thank you guys for stopping by. Happy New Year. Have a good day.